The rise of digital currency, how CBDCs are shaping the future. A profound change is occurring in the global financial scene. Central Bank Digital Currencies (CBDCs), which are digital tokens issued by central banks that function as legal money, are being actively investigated and developed by central banks worldwide. People, companies, and the world economy at large will all be significantly impacted by this possible change. The emergence of CBDCs is examined in this article, along with the possible advantages, difficulties, and complex balancing act between innovation and regulation. Comprehending CBDCs, a novel currency. CBDCs are not decentralized like private cryptocurrencies like Bitcoin. They provide a digital substitute for conventional physical currency and are issued and managed by central banks. Although a CBDC's exact design can differ, it usually has the following essential features. Central bank issue. The issue and redemption of CBDCs are entirely under the jurisdiction of central banks. By doing this, stability is guaranteed, and the volatility that many private cryptocurrencies are known for is avoided. Digital form. There is no requirement for physical currency infrastructure because CBDCs only exist digitally. This makes transactions quicker and more effective. Reasons for CBDCs ascent. Why now? The growth of CBDCs is being driven by several factors. Changing payment environment. Central banks are being forced to adjust as a result of the increase in cashless transactions and the growing acceptance of digital wallets. CBDCs have the ability to simplify transactions and lessen dependency on private organizations by providing a safe and effective digital substitute for cash. Financial inclusion. A sizable section of the world's population does not have access to standard financial services and is therefore unbanked. Because they offer a digital payment system that is accessible to everybody, CBDCs have the potential to advance financial inclusion. Fighting cash in the shadow economy. Cash makes it harder to monitor illegal activity and impedes tax collection by facilitating transactions in the shadow economy. With their built-in traceability, CBDCs may provide central banks more authority over the flow of money and help them fight tax evasion. Preserving control over monetary policy. The emergence of private cryptocurrencies prompts worries that central banks may lose their authority over monetary policy. In a financial system that is becoming more digitally connected, central banks can use CBDCs to help them keep control over the money supply and interest rates. CBDC's possible advantages. A better financial future? Advocates of CBDCs point out several possible advantages. Enhanced efficiency. CBDCs can simplify financial transactions, which might result in quicker settlement times and cheaper expenses for both individuals and companies. Financial inclusion. As previously indicated, CBDCs can offer a digital payment system that is widely available, hence fostering financial inclusion for the unbanked community. Enhanced security. To guarantee the integrity and authenticity of CBDC transactions, central banks can make use of cutting-edge security measures, which may lower the danger of fraud and counterfeiting. Increased transparency. Deals utilizing CBDCs might be easier to track down, which would help with tax collection and the fight against financial crime. Programmable money. Certain characteristics, such as targeted stimulus packages or expiration dates, could be encoded into CBDCs. This might give central banks new resources to control the money supply and affect the economy. Obstacles and things to think about. Getting around in unknown land. Notwithstanding the possible advantages, several issues must be resolved. Privacy issues. Privacy issues are brought up by the possibility that central banks may monitor CBDC transactions. To guarantee that personal privacy is maintained, strong data protection frameworks and unambiguous legislation are essential. Financial stability. It is currently unknown how CBDCs will affect financial stability. Risks could arise from the possibility of large-scale withdrawals from conventional banks to digital wallets. To reduce these risks, central banks must give considerable thought to how CBDCs are designed. Cybersecurity risks. Because CBDCs operate online, they are susceptible to intrusions. To guarantee the security of the CBDC ecosystem, strong cybersecurity measures and international collaboration are crucial. Financial exclusion. Although CBDCs have the potential to encourage financial inclusion, all citizens must have fair access to infrastructure and technology to prevent the emergence of a new digital gap. Impact on the private sector. Commercial banks and other financial institutions may find their roles disrupted by the advent of CBDCs. Ensuring a competitive and healthy financial ecosystem requires careful thought. The path ahead. An international trial in progress. The creation of CBDCs is still in its infancy. Many central banks are presently using research projects and pilot programs to investigate the viability and design choices. International cooperation and knowledge exchange on CBDCs are being greatly aided by the International Monetary Fund (IMF) and the Bank for International Settlements (BS). The particular structure of CBDCs. A range of options. The central bank direct model. Under this concept, CBDCs are directly held in central bank accounts by both individuals and corporations. Although it might circumvent the established banking system, this provides the maximum degree of central bank control. Two-tiered approach. In this approach, commercial banks serve as middlemen in a two-tiered structure. Commercial banks get CBDCs from the central bank and subsequently distribute them to people and companies. This paradigm provides central bank supervision while preserving a role for the private sector. Hybrid model. This strategy incorporates aspects of the two-tiered and direct approaches. For example, while commercial banks manage daily transactions, central banks may provide CBDC accounts for certain uses. Some models investigate the potential for offline CBDCs, which would work similarly to currency and not require continuous internet access. In places where internet connectivity is scarce, this might be advantageous. The functionality and accessibility of CBDCs will be greatly impacted by the model selection. The ultimate design will be influenced by various factors, including the intended level of anonymity, the role that commercial banks are expected to play, and the requirement for offline functionality. International cooperation and the regulatory environment. Creating a safe future. International cooperation and coordination are necessary for the creation and execution of CBDCs. Here are some crucial areas of attention. Harmonized standards. Ensuring global financial stability and facilitating cross-border transactions can be achieved by creating universal standards for CBDC functioning and design. Regulatory frameworks. To address issues with data privacy, terrorist financing, and money laundering, strong regulatory frameworks are necessary. International cooperation. To protect the CBDC ecosystem from cyber attacks, cooperation on cybersecurity best practices and procedures is essential. To solve these problems, central banks and international organizations are actively participating in talks and projects. The capacity of CBDCs to promote innovation while upholding security and stability in their finances will determine their future success. A new age of finance? A possible paradigm change in how we view and utilize money is represented by CBDCs. In a digital financial world, they present the possibility of greater efficiency, financial inclusion, and central bank supervision. Nonetheless, there are important issues that must be resolved in the areas of cybersecurity, privacy, and financial stability. It will need constant cooperation, creativity, and a dedication to responsible development to create a worldwide CBDC ecosystem. It will be interesting to observe how CBDCs change the financial environment globally and the future of money as this trip progresses. An overview of the future effects of trade with CBDCs. Central Bank Digital Currencies (CBDCs) have the potential to have an influence that goes beyond financial inclusion and domestic economies. With both benefits and challenges to take into account, their implementation has the potential to drastically change the face of global trade. Possible trade advantages. Enhanced speed and efficiency. Cross-border payments could be completely transformed by CBDCs. Conventional approaches, which involve numerous intermediaries and correspondent banks, can be laborious and slow. For companies involved in international trade, CBDCs can expedite the process and cut costs and delays due to their digital nature and possibly near instantaneous settlement timeframes. Decreased transaction costs. Intermediary banks frequently impose fees as part of the present cross-border payment system. Since transactions will take place either directly between trade parties or through central banks, CBDCs may be able to lower these costs. Businesses may become more profitable as a result, and global trade may become easier. Increased traceability and transparency. Because CBDCs can be traced by nature, trade transactions can be made more transparent. For regulatory objectives like preventing money laundering and trade-based financing of terrorism, this may be advantageous. Furthermore, supply chain management and logistics can be streamlined with real-time tracking of payments and commodities. New trade finance instruments. New trade finance instruments are made possible by the programmable nature of certain CBDCs. When certain requirements are met, including the delivery of products or the presentation of customs documentation, smart contracts that are integrated into CBDCs can automate payments. This can streamline the procedure and increase smaller enterprises' access to financing by lowering the requirement for conventional letters of credit and other trade finance tools. Decreased exchange rate volatility. According to some plans, CBDCs that are based on a basket of currencies could lessen exchange rate volatility for transactions involving foreign trade. This can promote cross-border trade and give businesses more predictability. Obstacles and things to think about. Harmonization and interoperability. For CBDCs to genuinely revolutionize trade, they must be compatible with one another and run smoothly. To create standards and procedures for cross-border transactions, international cooperation is needed. Regulatory uncertainty. The laws governing CBDCs are still being developed. To successfully navigate this new environment, businesses involved in international trade will require clarification on the rules governing cross-border transactions with CBDCs. Infrastructure and access. Not all nations may possess the resources or infrastructure required to successfully execute CBDCs. This might put underdeveloped nations at a competitive disadvantage in global trade and lead to a digital divide. Cybersecurity risks. Because CBDCs operate online, they are susceptible to intrusions. To guarantee the security of cross-border transactions involving CBDCs, strong cybersecurity measures and international collaboration are crucial. Hey everyone! If you enjoyed this video and want to see more awesome content like this, don't forget to give it a thumbs up and hit that subscribe button.